Well, happy Monday. I have a question for you. Who are reluctant landlords and how are they impacting the Austin market? We're going to talk about that. I'm also going to share with you a couple graphs that'll really highlight how the national housing market is kicking off in 2025. And of course, we're going to dive back into some up to the minute local data to show you what's happening in Austin in February and March. All right, let's talk about reluctant landlords. What does that mean? And what's happening in the rental market. So, in Austin, and like most markets around the country, we had a huge run up in home values, especially peaking out in 2021 and 2022. But since then, Austin has had a correction. Housing has come back down and it's been softening kind of, above COVID, but definitely well below those 2022 peaks. Well, what's happened is if you were a person who bought a property in 2021 or 2022 and you turn around to try to sell it, you're realizing the market is completely different. It's much harder to sell your property. And more importantly, more likely it's going to sell for below what you bought it for. For many of those people, that's either going to put them underwater or it's just not going to make a sale that is positive for them. So, what are they doing? They're putting their house in the rental market. Some of our clients are happy to do that. They want to be landlords. But a lot of our clients are like, hey, I'm just doing it to buy some time, see if we can get the market to improve. So in this article, which is on Bigger Pockets, I will drop it in the comments below if you want to read it. It even mentions right here, there's two factors that's making listing their home very difficult. Once hot markets, such as Austin, have cooled considerably along with the house prices. For buyers who purchased at the top of the market, selling could result in a big loss, meaning they'd have to bring cash to the table. And of course, that's probably reason number one. A lot of people would want to be a reluctant landlord. And then, of course, they're waiting for the interest rates to come down. And that hasn't really happened in a way that people would like. So what happens to the rental market? Well, you typically have a certain amount of inventory, especially in single family, let's say duplex properties, where, that's kind of your standard amount. Well, when you flood the market with all these extra landlords that aren't typically there, what does it do to rents? It softens rents. And then on top of that, we've built a lot of apartments, which I've talked about for the past several years. Well, now you've added all those rental units to the market. And simply all it's done is it kind of flooded the Austin market the past couple years with rentals. I think we will see that last year, this year. I think it'll start to tighten up starting next year, but it's going to take a full year. And a lot of that are these reluctant landlords. However, it's not because people are leaving the market. Check this article out. This was on realtor.com. Austin knocks Nashville off as the top spot for U.S. remote workers. And what they're stating, in fact, it said Austin, Nashville, San Antonio are the top three. When it mentioned Austin, it said Austin and San Antonio both offer affordable and falling rent levels, which we just talked about, as well as plenty of for sale inventory. And so what's happening is as the market adjusts, we're seeing that's making it more interesting for young home buyers. It's making it more interesting for renters. And of course, our population here in the market continues to grow. The only reason the pricing hasn't gone up yet is inventory. So as the next couple years play out, if we see inventory starting to tighten up again or demand pick up, that's where you're going to see the price for both rent and for sale start to change. All right, let's talk about the national market first. I'm going to move myself out of the way. There's the chart. So the strongest markets are going to be in the darkest green, the middle markets kind of a yellowy neutral, and then of course the weaker markets will be in the more red tones. So as we see, where's the hottest part of the market right now? It's in the Northeast and upper Midwest, Chicago, Wisconsin, Michigan, and then working your way through the Rust Belt and the East Coast. As you get to the coldest markets, mostly all Florida, parts of Texas, parts of Northern California, and a little bit around the Denver metro area. So that's where we're seeing, again, these were the hottest markets during the pandemic. They're starting to show that cool down. And of course, this is looking backwards data. But again, this is kind of how we're starting 2025. Take a look at this one. This is a survey done by resale agents like myself in all of the markets around the country saying, well, how are conditions? And so strong markets would be green. There is only one on the entire map, and it's Columbus, Ohio. A neutral market would be more in the yellow tones, Austin, Dallas, and then slower, very slow, Fort Worth, Fort Worth, San Antonio, Houston are starting to record. They're slowing down. They're a little behind Austin. Austin's had kind of a head start on a lot of markets in terms of having, let's say, a housing correction. I think we're closer to our bottom, but some markets kind of kept going up the last 2 or 3 years. At some point, they're going to start to turn as the price just gets too expensive for buyers or for what they want to pay. But this is nationally, we're seeing kind of a pause or a cool down kind of across the board. And they're all in different stages of their market cycle. All right, let's talk about the Austin market. This is February data. This just came in. So these numbers are through, collecting data from February through March 6th. Take a look at this chart. So this is our last 5 years of closed sales. And of course, the red line is 2025. It did not go up. It went sideways. And you can see, so that means the number of sales in February was well below the last 4 years. The only other year that had a dip in February was 2021. Well, what happened in 2021, even though that was the craziest year in real estate, is we had a huge ice storm and it shut the market down for like a week and a half. I would argue some of our February slowdown is the same thing. We didn't have an ice storm, but we did have a pretty cold last week of February. And I think that also reflects just buyers don't go out in that weather here. They don't write offers. They don't close. They move closings. So I think some of that is baked into the data, but the market was definitely slow. Sales were down almost 20% in February over this time last year. But the average sales price was up 2%. The median was down 2.6. So how can an average go up and a median go down? Well, the average is a blend of all the sales, typically means the higher price point, maybe the nicer home in the neighborhood that's in great condition did sell, and the ones that need a lot of work didn't sell. And so therefore, that it's pulling up that kind of average sales price. But the median across the whole market did drop a little bit year over year, about 2%. This week right here, this data is the week of February 23rd through March 1st. And again, I think this was the cold week, but listings were down 7%. Hey, you don't want to list your house if the weather's bad. So the listings were down. Sold listings were down 37%. But again, for 1 week. So I think what happened is a lot of closings got moved to the next week. Months of inventory, we're sitting about 4.2 months of inventory across the total market. And the median sales price is about 430, which is higher than we saw in January. If I scroll all the way down here, and I know these numbers are small, but right now we're sitting in 2025 in February, about 12,000 single family homes for sale. Last year at this time, we were at 10,300. So we have 1,700 more homes for sale right now than we had at this time last year. And that's more than we had even in 2010. Now, the market was smaller in 2010. But again, if you're a buyer right now, lots of inventory to choose from. And in 2025 pendings, the last year we closed 2,600 homes in February. This time we only closed just under 2,300. So again, more homes for sale, fewer buyers means pretty good opportunities for buyers right now. If I go into active data, this is in real time. We've got number of active versus sold listings in the market. You can see the spring trends starting to kick in. So here's the peak last year of inventory. We come down through the winter, dropped into December, and now you can see listings starting to build back up. We are entering typically the strongest 4 months in Austin every year, which is March through June. We're just now in March, April, May, June. These typically are going to have a rise in listings and a rise in closed sales from buyers, and following with that, a rise in the median home value. So we should see that if it's a normal year. We're going to see that over the next 4 months. We can already see the rise in inventory. We haven't yet seen the rise in closed sales. This is where you can see the blue lines with the buyers. Haven't yet, but I do expect in March, we're going to see a pretty sizable pickup, just because I think you're going to have those buyers who didn't buy or maybe even delayed some of those closings in late February into early March. By the time we get to the end of the month, I think you'll see March higher than February. This is original price versus sold price. So the original price is kind of where the market as a whole starts their list price. And then over the course of time, you'll see where buyers close. So again, we're now entering the spring, you can start to see the list pricing going up. And again, this is not on per house. This is just the market as a whole. You're seeing the original list prices going up. And now January, February, and March, we're starting to see the closed price starting to go up as well. Again, this is a very typical spring. Good to see that data, but it just means that the year has started a little slower than it started in 2024. And finally, let's talk about mortgage rates. So we've had a lot of good news here. The 10-year Treasury, which drives kind of the underlying value of the mortgage rates, has been coming down. Obviously, there's a lot of news about tariffs and other things in the economy. But watch this, because the 30-year fixed right now is about 6.79%. But honestly, if you're a primary home buyer, you have good interest rate, credit, all that stuff, you're going to have a lower interest rate than this. You might even be at 6.5 or 6.25. And then, of course, you have opportunities possibly to do buy downs or something like that to bring it even lower, maybe even get it down into the 5% range. So pay attention to that too. We've got really good mortgage rate trends starting to happen. Well, if you are a seller right now, the good news is we are in that cycle where typically we're going to see more buyer activity as the weather warms up, and that's going to continue through June. So this is a great time to be bringing your property to market in March and April. The trick is it's got to be really well priced, and it needs to be in good condition, almost move-in ready. It doesn't have to be flipped or super fancy, but it needs to be move-in ready for buyers, because they're going to have a lot of choice in the market. If you're not the best thing they can buy, they're going to go buy something else. If you are a buyer right now, this is the trend that you've been waiting for, is getting the mortgage rates to come down. And you have more inventory than any buyer in the past 15 years to look at. So this is a great opportunity to be in the market looking for homes. Anyways, if you want to connect, feel free to reach out to us at Ryan Kelly Group. And of course, go to our YouTube channel, click the subscribe button. We'd love to have you follow these videos each and every week. Well, hey, we got spring break next week coming up pretty fast. And so our weather's getting good. Spring break's coming up. The market's heating up. And I will bring you even more data next Monday.